Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Thursday afternoon, welcome to the COB. I'm Nadine Blaney.
I'm Juliette Sally. We're almost ready for Valentine's Day, Nadine.
Wow.
Valentine's Day almost came to the market as well with a record at one point during the day's trade. Let's have a look at where we have finished, kind of sold out into the close there.
We could call it a fizzle, but it's hard to take too much away from it when we have these really great stories coming from reporting season. Temple & Webster being one of them today. It's not disappointed is what I'm going to, that's, obviously early days and that's a bit wishy-washy, but we've had some real stellar results.
Indeed. All right, let's get to some of the thematics then of the day, and it really was about this record retreat and some of the reporting reactions from the companies that reported. I was sort of interested in IAG. That was one of the companies that I spoke to. I spoke to the CFO, William McConnell. Look, they actually looked pretty good, but it was the
really
fact,
swift reaction.
Yeah, and it was the fact that the dividend missed, and that's how much you can be punished in reporting season, isn't it? He said, as we've heard, basically they normally pay out more in the second half, so I guess patience is your friend there. And then prescribing profits, we've got the Sigma and Chemist Warehouse hitting the boards.
Yeah, and it's been one of the most successful sort of corporate deals done in a very long time, and we had the pleasure of speaking with the Sigma CEO a little bit earlier on, and that interview is up on the website if you'd like to take a little look-see.
Yeah, he joined us live from the ASX, and some really interesting commentary pieces out there too if you're into this kind of thing, the amount of people that became millionaires and potentially billionaires from that deal today. All right, let's have a look at the sectors of the day and whether or not you made money with your investments. CSL fell by 0.6%.
Guess what? I just spoke with Dr. Sam Hupert, who's from Pro Medicus. Pro Medicus's share price is worth more. It's a higher price than CSL. I mean, who would have thunk it? CSL just being the stalwart of the Australian healthcare system, but there's been a lot of disappointment following its results. But I did just have a chat with Rachel Waterhouse, who's the CEO of the ASA, saying, maybe it's a buying opportunity for some.
Yeah, indeed. And I noticed that he makes it into the Forbes top 50 wealthiest Australians. Healthcare stocks, having a look at those. We just did that. Let's have a look at the miners. And BHP had a good day, up 2.5%. Rio Tinto was up 1.2%. All of these big companies reporting next week. South32, though, did report today.
And a pretty good reaction to its result as well. Mineral Resources putting on 7.3%. I didn't see any particular news associated with that, but it has been a very beaten down shares, and we did see a bit of an uptick, as I mentioned, in the price of iron ore. CBA, what can we say?
Another record. Wow, look at that, $166.14. We spoke to CEO Matt Common yesterday. You can still find that interview on our website. Of course, the others all report out of cycle. Macquarie gave 9-month guidance yesterday. Its share price rose 0.5% today.
Yeah, we will start getting some of the quarterlies coming from the bank, so that's always interesting to take a listen into. But to your point, one of the big stories today, away from reporting season, is Sigma Healthcare, which finalized its merger with Chemist Warehouse, so up by 3.6%.
And Pro Medicus, you discussed, they're distributing a 25-cent interim dividend, half-year net profit jumping 43%. Shares, though, punished, but as you mentioned, higher than where CSL is.
Yeah, and it hit a record high earlier in the session, so perhaps a bit of profit taking. Also, it didn't meet consensus expectations, but those are pretty hard for analysts, I think, to get a hold of because they just keep, signing these contracts and the timing of these contracts coming through. But I mean, everybody who I heard talk about it just said it was a bumper result.
Yep, we mentioned South32. I mean, also you've got to look at the Dalian iron ore futures contract rising as well, which lifted a lot of these iron ore players, but it was up 3.5% after its results to $3.55.
And Origin Energy saw its stat profit rising, first half jumping just shy of 27%, but shares just down slightly in Treasury Wine Estates. So this is when it comes to the outlook. So it did say that its FY25 earnings will come at the low end of guidance, and that's enough to sour sentiment. It's down by 5.3%, and I think that might also be some of what happened with IAG because it did sort of guide to lower gross written premiums coming through in the future. And so, yeah, the results are backward looking.
Yeah.
It's all about the outlook.
Absolutely. All right, Qantas shares dropping. Macquarie downgrading the stock to neutral, citing intense market competition ahead. We touched on IAG there. And the CEO, I mean, we spoke to the CFO, but also reminding us that there are good and bad times. But as you say, it was about that GWP downgrade and or the lower end of the guidance and the dividend miss.
So HomeCo Daily REIT's another one of those companies that we did speak with today, coming under a bit of pressure, down 2 cents to $1.18. Even as it returned to a profit of $117 million, roughly speaking. So all of our reporting season coverage is easily accessible via our website, ausbiz.com.au.
All right, let's get to our guest, Jimmy Jang from Macro, joining us. Jimmy, your take so far on earnings season, and I guess what we've seen from some of those companies, that the profit looks pretty good, but their share price gets sold off, talking about IAG in particular today.
Afternoon, of course. I mean, IAG fell over obviously more than 10%, and obviously you mentioned about the dividend aspect, but it's also the concerns around the competition from Suncorp as well. So largely really good report. I mean, the NPAT was $778 million compared to a $407 million in the first half of the 24, and also the declines of $700 million. So that kind of really helped with the $140 million net reserve release from the business interruption, but it's still a very strong figure considering that the NPAT was around $898 million for the year 24. So I think it was a bit of a harsh sell-off, and IAG was something that we definitely had in our watch list for a while now. So I think it's getting really close to our buying range ourselves, but I think it's still a really good, fantastic buying opportunity for the people that was on the watch list at the moment. And the another, obviously, you mentioned the Temple & Webster, a really kick-ass result. Obviously, the strong online furniture sales was another really big driver. The revenue obviously increased another 24% to about $313.7 million, which is about a 1% beat to the consensus of the home improvement revenue of 41%. And also the beat was largely driven by the better unit economics, with about 80 basis point beat in the delivered margin, assisted by the increasing mix up to the private label as well. So really good result, and definitely something that we held up for a long time now. So really pleased to see that kind of report coming through. And another one that we kind of made a note of was Domain. Now, Domain jumped about 10.6% after hiring the formal real estate group CEO, Greg Ellis. That kind of management strength is really kind of pleasing note for us, especially because we were quite heavily in the realestate.com ourselves. So Domain is something again that we wanted to maybe potentially diversify our tech real estate sector. So it was kind of really good for us to kind of get a note of. And their EBITDA margin, which is something that we were kind of keeping an eye on, was about 35.8%, which is for the guidance of financial 25 margins, it's going to be really stable kind of margin for us. So really good day for at least for all the companies that we had on our watch list, and definitely looking better, hopefully.
I couldn't help but note a release coming through from Kelly and Partners Group earlier this week. So they bought a couple more entities here in Australia. But it came to mind, Jimmy, when I saw you on screen, because you've recommended that company previously on AusBiz. So talk to us a little bit about what's happening at the group.
Absolutely. No, Kelly Partners Group is probably our core position in our small cap to micro cap space in our portfolio. And one of the things that we really like, as you have mentioned, they're really executing their global expansion strategies, now operating across the globe, not just in Australia, so Hong Kong, India, and the US. And one of the things that, as you have picked out, is the 12 to 15% of their entire group's revenue is now coming from the US, and the revenue was also up to 22.8%. The reason why this is relevant for us is obviously US right now, with the government in place, they're really pushing for the entire board. And one of the things that made it really volatile in there was actually around macroeconomic factors like tariff investment, about how that would affect Australia. So what we actually want to do now is that we actually want to stay away from this trend that's going to be too volatile with what's happening in the US investment. But what will be really good is for businesses like James Hardie, for example, 70 to 80% of the.
Yeah, Jimmy, I'm really sorry. We're having a lot of trouble with your audio, which is not great for those that are watching live or listening in podcast form. So we'll ask you one more question, see if we can fix it. Otherwise, we may have to say an early goodbye. Maybe we can just find out what you're looking at in terms of ETFs. I did have a conversation about gaining exposure to the Russell 2000 earlier on today, or are you still looking at some of those big mega thematics?
Apologies, I'll definitely double check. I hope it's getting better. But yeah, the semiconductor is our key asset at the moment internally at Macro. So obviously with the big push of the entire US moving forward with the development of the data centers, and they recently obviously established some big project for Stargate that a lot of the viewers might be aware of. So semiconductor industry is looking really kind of promising for us, and for us to really capitalize that trend, we picked the Global X Semiconductor ETF, the ticker code is SEMI, which covers that leading AI chip makers and the foundries and the suppliers as well. So it's a really kind of balanced way to ride this AI-driven semiconductor boom that we can even see even further, especially with how the DeepSeek over in China is also jumping into the market at the moment. So really another sector that we can look forward to, at least in the next 12 months.
All right, did get better. Thanks, Jimmy. As always, have a good afternoon. Jimmy Jiang from Macro. The stock of the day was Pro Medicus.
It was Pro Medicus. You can listen to the CEO interview up online shortly or via our content partners, the team at Feed the Fear and Greed podcast. But we picked it for stock of the day. Ben Clark, TMS Private Wealth, Mark Gardner, MPC Markets. Take a listen.
I'll say a hold because I think, as Mark was saying earlier, momentum is still a powerful thing in today's market, and this company has share price and earnings momentum in spades. I wouldn't be surprised to see a decent correction on the back of this result, and it's probably one that you want to keep an eye on and have on your buy list if you felt like you were getting it for a decent valuation.
But it is getting fairly close at the moment to. I think a bust below 260 really will trigger a rebalancing trim, and nothing more than that, to be honest. It's what is it, 350 PE? Like it's a sentiment stock realistically. If the market loses belief, it'll pull back. If they start throwing out some really good news and contract wins, then it could easily go through $300. And sentiment's super hard to predict. So at this point, it's kind of more of a technical analysis point of view. From our standpoint.
So there you go. I think price is a little bit of a sticking point, but you heard both the guys saying that they would definitely not be selling out. It's just tough to buy when it's as expensive.
That was Junbei Liu said, that was one of the stocks she said, always buy on a dip, right? Yeah, she really liked that from 10cap. Market leaders.
So let's get across them. Liontown Resources, Mineral Resources, and then we get to reporting season with Domain, Polynovo, and IGO. So some pretty chunky percentage point moves there for the likes of Liontown Resources. I saw some sort of a investor presentation. Didn't see much else coming from Liontown. I'm willing to be standard corrected though.
I think there just seemed to be a nice rebound in a lot of those lithium players that were kind of hit hard. I guess that cattle news that we've been talking about this week as well. Let's have a look at some of the laggards. IAG we talked about there, the guidance towards the lower end for its gross written premiums and a dividend miss. Aurora GrainCorp came through with an update as well, flagging what its earnings are likely to be, and I'm struggling to find it as I talk on the go, but I think it was not what the market was looking for, sending shares down 5.4%. We touched on Treasury Wine Estates and AGL.
Yeah, okay, so in the small cap space, let's see if we can see any themes. Calyx has signed a deal, I do know about this one, with Pilbara in terms of processing. I was hoping to speak with the company today, but we've just been so flat out with some of the bigger companies reporting, but they are on the list. Interesting company that. We've got Wildcat Resources at the bottom of that list, up by 10%.
And having a look at the lower end of town again, some weakness in those mining players. Brockman down by 17%. Is it Orion? It was down by 12.5%. And Alliance Aviation also weaker there. All right.
Yeah, before we get to what's on overnight, I just thought we should get you across our next virtual investor event. It's called Private Access.
That's a nice brownstone.
Compelling, doesn't it? So equity to credit and plenty more besides. We'll talk all about private market opportunities. I mean, we continue to be told that private opportunities are where to be in 2025 and beyond. So Juliette, March 6th, the hows and the whys and the opportunities on offer. So you can register now. It's never too early. It's free. Ausbiz.co, private access.
All right, let's have a look at tonight, because we do get the producer price reading in the US, also some earnings from Airbnb, Coinbase and John Deere. And I did find the GrainCorp news. I know we're backtracking now, but it says that it expects $60 to $90 million net profit for full year 25. That was actually higher than what it had flagged earlier. So I'm not sure why shares are being sold off.
Well, I appreciate you being conscientious and finding out, because I hate to be left hanging when it comes to stuff like that. We will not leave you hanging tomorrow. We've got earnings coming from AMP, from Ansell, from Cochlear, from Cettire, which of course had a big sell-off in the wake of tariffs being announced and the likes, Deterra Royalties and Woodside. So yeah, another day to end the week. We'll see what the day will hold.
Yep, and the market, look, it's pretty flat. The ASX 200 up just 5 points to 8,540. That's a nice round number though, isn't it? But it did test records earlier in the session. And you know what? You never know what could happen. Fridays never tend to be that great because people try and take a bit of money off the table ahead of the weekend. But I would assume sometime next week, particularly with some of those big heavyweights, BHP and the like, reporting next week, we could be continuing to see these records tested. And
of course, we're keeping an eye on US politics. Bank of England being cautious about further rate cuts, and after that inflation read as well last night. Yeah, a bit of cold water being thrown on the prospect for rate cuts coming in the US, but I'm getting ahead of myself.
All right, tomorrow, 9:45 a.m, we are back live. We'll see you or join you then.
See you then.